The What and How of Real Estate Investment Trust, or REIT, a guide for the novice investor. Do you know that there are plenty of ways that you can invest your money in real estate without the need to own or operate your own rental property? For instance, you can either invest in crowdfunding real estate, and there is another way which is very popular, known as REITs, or Real Estate Investment Trusts. The rich all know that investment in the real estate business makes your portfolio stronger. REITs are worth investing in, especially if you are a beginner investor, but there are plenty of things that you need to know before investing. Hello 101 community, welcome back to our YouTube channel. In this video, I am going to tell you everything about the Real Estate Investment Trust. If you are a novice investor, make sure you watch the video till the end. But before we begin, if you are new here, make sure to subscribe to my channel and turn on notifications to never miss any updates. So, let's start. What are REITs and why should you care? A REIT, or Real Estate Investment Trust, is actually a corporation that possesses funds and operates income-producing real estate like buildings, shops, offices, and many more. The investor of the REITs gets the shares from the income generated by the REIT from the rent or interest on the real estate debt. One thing you must know about REIT is that this company does not sell the properties, rather it relies on the rental or interest income. This type of investment is quite similar to the indexes or mutual funds that allow us to invest and get benefits from the success of different companies. In the same way, REIT enables the investor to get benefits from different pieces of income-generating real estate. REIT, or the Real Estate Investment Trust, is the easiest way to invest your money in the real estate sector. As we all know that a lot of people do not have enough money to invest, or some people don't want to risk their money, especially in the beginning. The main reason why you should care about this company is it has some of the best performing asset classes available to investors. So why to invest in REITs? A question that keeps coming up so many times, and probably this might also pop up in your mind too. We all know that real estate investment requires a lot of money, and an average person does not have that much money in their account, which makes it difficult to invest. So Congress introduced the Real Estate Investment Trusts to enable everybody to invest in this sector. But the main reason you should consider investing in REIT is that it has been delivering competitive returns for the last few years. Another thing that attracts many people to this investment is the high and steady dividend income that you can get, and also you can get a long-term capital increase. For instance, if we talk about the recent situation, in the mid of 2021, the average yield of REIT was over 3%, which means that it was more than the dividend yield of the S&P 500. Another thing that gives you a strong reason to think about investing in this sector is that REITs have to pay 90% of their taxable income in order to comply with the IRS regulations. And that is the main reason they pay some solid dividend income to their investors. What are the advantages of adding a REIT into your portfolio? The low association with other assets also puts a strong impact on your portfolio diversifier. So the benefit of a portfolio diversifier is that it will reduce the overall risk. One thing that many famous investors suggest to people is don't invest just in one sector, and they always suggest focusing on diversification because it reduces the risk without even adversely impacting their returns. REITs own different types of properties, so this lessens the risk of just depending on a single tenant. As we all know, the situation of the market is volatile, especially now when many experts are predicting a recession. So imagine if you are just relying on just one thing. You might be one step away from disaster. So the good thing is that this is not the case in REIT. In order to understand this concept in a simple term, then imagine if you own a single property, like a gas station, and due to any reason, its value goes down or depreciates. What would happen? surely it would be a devastating situation for you, and so REIT prevents you from this kind of thing. Another benefit of investing in a REIT is that you get a chance to be a part of a pool of capital, and you can get interest from a much larger investment. Now, another important thing I want to mention here is that you probably know that real estate is mostly an illiquid investment, which means that once you have an investment in this sector, you are not going to take out the money really quick. Now, imagine, if you need cash in an emergency situation, you won't be able to do anything. Let me give you an example here. Suppose you are the owner of a small house and you want to sell this property to meet your expenses. So the first thing that you have to do in this case is that you need to list the property, wait for a reasonable offer, and then hope to make a deal. So all these things take weeks or sometimes even months. And don't forget that you will also have to pay the agent fee, which would also become a hefty amount. So you don't get the expected amount to meet your expenses. Now, the benefit of investing in REIT is that if you immediately need money, you can convert your share into cash just by logging onto the online brokerage account. And you could sell your share in the open market. You also don't need to pay the fee to the brokers. Many other private real estate investments work with little insight, and if the real estate sponsor makes such kinds of decisions, that might not go in your favor. However, REIT is very transparent. Even if you are a novice investor, you can still get a major insight. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. Let's move on. It's not all sunshine and rainbows. Are there disadvantages of adding a REIT into a portfolio? Well, mostly there are benefits of investing in REIT, but there are some drawbacks that you must also know. The first con of investing in REIT is that you have to pay the property tax, which might be 25% of the total operating expense. Sometimes the state or the municipal authorities upsurge the amount of taxes, which might also put a lot of burden on your shoulders. Another drawback of this investment is that the taxes are due on dividends, and this tax rate will be higher than other dividends. Sometimes when the interest rate of a treasury fund increases, it gets all the attraction, and as a result, people withdraw money from REITs, which decreases the price of shares. If we talk about the oldest REIT, in June 1965, Continental Mortgage Investors became the first real investment trust to be listed on the NYSE. Between 1990 to 1997, almost 114 new REITs were created, and this brought the REIT market valuation to $135 billion. Any REIT which transformed to the self-advised status before November 1991 is also considered as a new REIT, as of the conversion date. There are plenty of companies that include the examples of newer REITs, like Realty Income, National Retail Properties, Store Capital Corporation, Omega Healthcare Investors, and many others. How to invest in REIT? The investment in REIT is quite similar to mutual funds. The money that you spent on buying the shares of REIT will be invested in the properties that will work best and will give a strong return. In simple words, if you're an investor, you are contributing the money, and the REIT is only making a decision on where and how to invest. So the REIT will give you a chance to get benefited from the historically well-off real estate market without the need to take out a big loan. So real estate investment trust will allow you to invest in this sector without any need to own any physical property. All you have to do is sign up for the brokerage account, mind due diligence, and plan to invest your money. There are some of the best online brokers for REITs, including Fidelity Investments, and if you are a beginner, you can also go with TD Ameritrade. Remember, get some knowledge before investing, otherwise you might be risking your investment. That's all for today's video. I hope you enjoyed it. If you want to see more videos like this, subscribe to our channel and click on the bell icon, so you'll be notified of every update. Also, don't forget to check the links in the video description. And while you are here, click to watch one of these two videos appearing on your screen right now. I will see you there. Take care and stay tuned.